Hi, it's Carl Allen. In this playlist, I'm going to be doing some deal reviews for you. So part of my Dealmaker Protege program, we review our Dealmaker student deals on a weekly basis. They're anonymized. We put them on a Zoom call, we break the numbers down, we look at the growth opportunity, valuation, what a deal structure might look like, interpreting the seller psychology and how that maps in to a desired outcome in terms of a deal structure. We'll then also look at what the exit options might be for you as a new business owner after you've grown the business and you want to go to market and liquidate the asset. So every single week we review a bunch of these deals, and my favorite deal of the week we're actually going to showcase for you on this channel. So absolutely check these out, and don't forget to like and share these videos, and definitely hit the subscribe button so that you're getting these deal reviews as soon as we release them. So enjoy the video, and I will see you soon. Until then, bye for now.
I'm not going to read the disclaimer a second time, but I am going to note that it equally applies to this deal as it did to the last. I will get deal number 2, simple model down here. This is a bigger deal.
Big boy pants time.
I think this is Adam Jacobson's deal, I believe. This was, no, his was the flooring. His was number 3. Automotive accessories. Oh, man. Every week I say I'm going to write the names down. I think I don't need to write them down. I remember them. Then I get here and I think, hang on a sec. Whose deal was this? I remember the first one was Charles, but I'm sure whoever's deal this is will let us know in the comments so we can get them on in a minute. Let me read you through the notes for deal number 2. What's the business? It's automotive accessories. They, again, design, develop, manufacture, and distribute exactly the same as the last one. These are manufacturers. What do they manufacture? Pulleys and brackets. I probably should have done a visual on that and gave you a Google image gallery of what pulleys and brackets are. What they really are is they're upgrades to right on the engine, for performance purposes. So that's why it's in the aftermarket. They don't sell into OEMs. It's an aftermarket product only. Who buys it? What are the market segments? It's basically for performance-driven auto enthusiasts, people who are looking for, a boost in the performance of the vehicle that they own. They also do, just like the last deal, have some exposure on the high end. They do supply their gear to professional racing teams. Now, customers, distributors, online retailers, and they do some direct to consumers as well. This business started as a machine shop. It's now fully dedicated to selling pulleys and brackets. This business is located in the U.S. Northeast. It was founded 43 years ago now, 1979, been a while. Trading area, again, is international. These people do sell internationally. The majority of sales, however, are in North America. The business has been for sale for 7 months. The ask price is $5.7 million. There is property in this deal as well. Obviously got to be a lot of it because it's valued at $9.4 million. You can put a offer in on the business alone or the business and the property, right? The property is only optionally available. It's not mandatory that you pick it up. This is owned by 2 cousins, 50% each, and they inherited the business from their grandfather. So these 2 guys have been tight. They've been working together their whole entire life, get along good. Sam is the older one. He's 73. He works full-time in the business. He handles financials and operations. Max is a little younger, 69. He also works full-time. He handles the engineering side of things, which is obviously really important in a business like this. The notes kind of indicated that this business runs on autopilot. So Sam and Max are kind of winding down a little bit. I think autopilot might be a touch of an exaggeration, but that's a message that we get a lot from sellers. No, I'm not critical to the business, but of course, part of our due diligence exercise is to find out whether that statement is credible or not. Both are in full agreement on selling. Sam is running point on the sale, but Max definitely involved and definitely is going to have to sign off on it. Neither wants a continuing role in the business, but available for marketing expos. That seems like a little bit of a non sequitur. I think that really means is we don't want the stress of having operational duties on a regular basis in this business. But, if we're going to, pop in once in a while to lend our expertise, on the marketing side or other sides, they're not necessarily against that idea. Motivation for selling is retirement. They have a fishing boat on Cape Cod. They want to enjoy it. This is a retirement sale. 65% of the business comes from 12 customers. And I'm assuming those customers are, some kind of a distribution shop or a dealer, a dealer or something of that nature. The rest of the business comes through smaller distributors and retailers. They do have dealers in all 50 states. They have over 20 20 dealers in California alone. There are 37 employees working in this business. Now, legacy is important to Sam and Mac. I mean, this is a family business. It was started by their grandfather, and they have many long-term employees who deserve protection. This is a pattern we see in red light, green light. You know, if this business has been handed down, typically 1 or 2 generations, legacy tends to be important. If it's a business they picked up and have bought themselves over the last 6 or 7 years, yeah, you know, it tends to be a little bit less important. But this one is important to Sam and Max. They are operating at less than capacity, only working 1 shift. Would be manageable to add a 2nd shift if and when needed. The website is good, functional, and thorough. Mud score is only average. Sam and Max motivation, that's pretty firm. But again, not really any distress or urgency noted from either owner. This is one of those deals where I just don't think the broker was that forthcoming in providing information that the person who submitted this deal could include. The submission form was a bit light, but I don't necessarily think that's a reflection on the person who submitted it. Maybe just really tough to get some information on these people. So there's a lot of questions I had that I couldn't get answered, you know, through the information memorandum, through the website, and, you know, through the submission document. And I guess that's one of our challenges in this marketplace when we're trying to buy these Main Street type businesses is we don't get a full picture, you know, from the people that are trying to sell it, either the seller or the broker. So you've got to do a lot of digging, right? You've got to do a lot of probing, and it's just part and parcel of what's necessary. So the information is a little bit light. Again, not necessarily a reflection on the person who submitted it, but it was a tot light. I mean, it is a fairly big business, and there's a ton of questions that come to mind, but I don't have any more information on that. But based upon what you see, Carl, do you like what you see?
I'm a little bit mixed actually on this deal. Obviously, it's a nice big deal, lots of good numbers. It's quite a simple business, kind of in a good way, but then it's like a box shifting business. There's no real uniqueness in this. I think, you know, that it's just a trading business, isn't it? There's no real value add beyond.
Well, I think because they're dealing with racing teams, I think there is a bit of value add. Like this is a performance type product, and you know, at that level, then I'm sure like little small things matter, and so there tends to be a little bit of value add in that. I don't think it's really a commodity. Yeah.
Okay. All right. So obviously, I've never seen it before, and I'm not exactly clear what type of components.
You know what? I'm gonna do the.
But this is a massive market. This is a $62 billion market, and the automotive parts industry is growing because we still got delayed supply chains on new vehicles, whether it's EV cars like Tesla or. I ordered my wife a new Range Rover SUV almost a year ago, and we still don't have a build date for that car yet because supply chains are still crazy because there's still a lot of COVID stuff going on in China, where a lot of cars are actually made. So I think a lot of people keeping their cars longer, a lot more spare parts, all those different things. So that's good. The revenue's stable, so we can see the screen, John.
Yeah, that's the idea. I want you.
Okay. I didn't want you going on the website.
No. I'm trying to give you an idea what these pulleys and brackets are. This is not the company that's for sale by any stretch. I'm just when I first saw pulleys and brackets, I wasn't sure what that really meant, so I wanted to give you a little bit of a heads up in terms of what we're talking about here.
Okay, so stable revenue, it's kind of hovering around that 8 million and change mark. Gross margins are quite low, but if they're selling mostly through distributors, obviously you've got the distribution margin inside of that, so that would explain 28% gross margin, quite stable. The operating margins are really good. 13% for a business like this is pretty good. Here's one of the red flags I've seen, right? So if you look at this business, in 2022 did $8.5 million in revenue, $2.4 million gross profit, and then had $1.1 million of EBITDA. So they have a $1.3 million a year overhead to kind of run this business. So the gross profit is impacted by their cost of sales, which is obviously they source these products, they move them through distributors who then sell them to the end user. So you've got about 1.3 million of overhead. So let's say $300,000 just to kind of operate the business. And then let's say you've only got $1 million left for employees, which would be high. They've got 37 employees at $1 million. That's an average of $27,000 per employee. So that number doesn't stack up for me. Unless they're paying everybody on minimum wage, even so, 27 grand a year average, that seems quite low to me. So I think this deal needs a little bit of financial DD around that income statement just to see what those overheads are. And I'd be very surprised outside of employees if you could run an $8.5 million business for only 300 grand. Rent, presumably they're paying rent back to their real estate co. That's something that...
Carl, let me jump in here. There was a sheet on ad backs that was an absolute complete mess. I spent about a half an hour, 40 minutes on it trying to get it to reconcile to the financial statements and to get it to make sense. It didn't, but they did, to their credit, put a rent adjustment in there. They are overpaying rent by a couple $100,000, but they're also paying a pretty big bonus to these two cousins who run this business. And so they sort of offset. So these EBITDA numbers in terms of the ad backs, yeah, they're a little bit shaky just because of the poor quality of the financial numbers that were submitted.
Yeah, okay. And obviously the profitability has kind of, dipped a little bit. That SBA loan forgiveness in 2020, not sure that's a real add back. We could debate that, but it's not worth $5.7 million in my opinion. It's not got a lot of cash in it, but looking at the business model, their cash conversion cycle, that they might not need it. So normally when you're looking at a business, you want to see around a month's worth of revenue in the business's cash. So in a business like this, you're probably looking at around $700,000 and change as cash that you would ideally need. All the working capital in this business is basically inventory. So it's $3 million of inventory. But what's also really interesting is look at the accounts receivable number. So one of the things I always look at in a business that's primarily business to business, which this is. So it's got distributors and agents, and then it's got a little bit of business to consumer stuff as well. So I would expect to see a much higher level of accounts receivables. So what you can do for the newbies, what you can do is if you divide the accounts receivables number by the annual sales revenue. So 387,000 divided by 8.5 million. And then you multiply that number by 365. It tells you on average how many days it's taking their customers to pay their invoices. And in this instance, it's 16 days is their AR. And if you assume a third is B2C and 2/3 is B2B, then you're probably somewhere around 20, 22 days. That's really low for the automotive supply chain industry. Really, it's generally in the 45 to 60 day range. So there's a few little things going on here with the numbers, which I think would need some deep dive. I think clearly at $1 million and more of EBITDA, could this be an annuity deal? I don't think so. I don't know enough about the seller psychology. This is probably going to have to be an SBA deal. I think this business is worth probably somewhere around the 4 million mark. And then I think you probably need $500,000 potentially in top up cash for working capital purposes. Be interested to see how much of that $3 million of inventory is actually good inventory. Because another thing you can do in your vetting is divide the cost of sale by the inventory on the balance sheet, and that tells you how many times a year they're moving their inventory. It's less than twice. So their inventory on average is sat in that business for about 5 months. That's way, way, way too long for this type of business. So one of the things that might tell you is a lot of that inventory is not worth anything. It's been sat since 1979. It's probably not sellable. Largest individual deal I ever did, I bought a business with $6 million worth of inventory and $5.5 million of that inventory. We couldn't even give it away. We actually burned it. We set fire to it. It was corporate uniforms. They were so old. The business had rebranded about 5 times since the stuff was made, which is why no one was buying the stuff. So often when you've got businesses with a ton of inventory, you think, oh, wow, great working capital, very strong balance sheet. But often some of that inventory or a lot of it is not actually worth anything. So I think, John, from what I'm seeing, this probably needs to go down the SBA route. And is it financially robust enough? Are the numbers solid enough for the SBA to, really give this deal a green light? I'm not sure. I like the sector. I think, it's a nice, stable business at revenue and margin level, but there's some financial flies on this deal when it comes to the balance sheet that I think would need to be investigated. So
my memory improved. This is Gary Schmidt's deal. Gary is on the call.
It is.
Oh, yeah. Let's hear from Gary. How you doing, bud?
So Gary,
Good. Good. The other one.
Gary, I'd like to get you on here, but before I do, first time I bring somebody on, I want to remind them that if you see some stuff on the way I wrote this up that weren't quite accurate, that was by design, because I'm trying to, mask the identity of the deal and to protect the confidentiality. So sometimes when you're talking about the deal, it's hard not to slip in the location or slip in the name of the people, etc. So when you come on, I just like to give people who are doing this for the first time a little bit of a reminder on that front. So the stuff that you see that's identifying that's different than the real deal, that wasn't by accident. That was on purpose.
So this deal, I love the racing part of it, right? I mean, that's a big deal. I'm a car guy, an automotive guy, been that way a really long time, and I like their products. It's a big name in racing parts, and in if you're looking to redo your '57 Chevy or your '69 Camaro, jake up the parts a little bit there and get some new shiny stuff on your motor. These guys are players in that area. They also sell to racing teams, which again, big motors. They want to have it look nice when they're doing 180 miles an hour down it. But the financial part of it, when I talked more to the broker than I did the owners. I really had very little time with the owners. He's still on me for a personal financial guarantee, which I'm not giving him, and I've told him that a couple times. That said, the financials for the business, they had to go get somebody to do the financials so they could sell the business. So they got a CPA to come in last minute, I'm guessing, I don't know, and he kind of went through as much as he could and got as much ready so that they could sell the business. But the financials I don't even have a really great idea, and he just brought this up last week, but I don't really have a great deal for that the financials are as well done as they should be. I don't know if the business, if you took a deep dive into it, you might find great stuff. It might be a phenomenal business, but you're just afraid you're going to get,
I don't think you'd ever know in this business, Gary, just the way that whoever
not.
They brought in, put together that sheet in the sim that tried to reconcile the ad backs and that whole thing was an absolute mess that I'm not sure even if you did do a deep dive, you'd be able to figure out the financial.
Still my point, but it's a cool business. Again, they've been around for a while. They're not newbies to this block.
Yeah. So, I mean, one of the ways that you can handle that, I don't know what Carl thinks about that, but when the things are a little bit iffy on the front end, you say, okay, we'll take it at face value, but we're going to have to put a pretty big chunk of this as an earnout in there so that if things happen the way that you said they happened in the past, we're good in terms of our offer. But if not, then we're going to have we need the flexibility just because of the I mean, the company this big should not have financials that are that messy. I mean, they really shouldn't.
No, it didn't make sense to me. I think what's interesting is you could probably get $1.5 to $2 million out of that balance sheet potentially. I know the fixed assets were heavily depreciated, but they've probably got a liquidation value higher than the depreciation value.
Yeah, they have like 8 or 9 machining stations. I mean, they have quite a bit there.
Yeah, and then all that inventory, that's all super valuable stuff, providing, of course, it's all sellable inventory. Because when you're financing inventory, what an inventory financier will do is they'll ask for an analysis on that inventory by SKU. So what they'll say is, hey, show me all of the products you've got, show me how many you've got, and then show me how many of these you've sold in the last 6 months. And all the stuff that's like slow moving, they won't lend against it. So you might get.
And on top of that, Carl, you need an inventory management system to even approach
absolutely. Yeah. I once looked at a business. It was a carburetor company in Florida, and they would go around, they would pull all the carburetors out of all of the cars at a scrapyard, they would restore them, and then they'd sell them all to auto repair companies, eBay, all these different things. And I asked that question once. I said, can I have an inventory report? And they didn't have one. They said, but you're welcome to come down, walk around the warehouse and count them all. And they didn't have the information. So you can't fund a deal like that.
No.
You can't do it. So I don't know what money you get out the balance sheet, but let's say you could get 1 to 1.5 million across the inventory and the fixed assets. Is the level of seller distress enough for such a low closing payment, and then seller noting and earn-outing the rest through the deal structure? So that's one way of doing the deal, but only a distressed seller psychology. I think there's not enough cash in the business. There's no AR. They don't own the real estate. There's cash flow lending wise. I think
they do own the real estate.
It's worth 9.5.
Yeah, but it's not. It's a separate transaction, isn't it? That's the $9 million deal to buy the real estate. I wouldn't pay $9 million for the business, for the building in this instance. But yeah, my gut's telling me this would have to be an SBA deal. But if you've got got issues with what's going on, they are as well. So yeah, I don't know. And is this a trade buy deal? I don't think I'm not seeing a lot of M&A in the auto repair market, the component market at this kind of level. There is up at the $100 million plus level, but yeah, I don't know. So it's a marginal green light for me. I think it's definitely worth doing an SBA application if you really like the deal, and a lot of these questions can be resolved. Be interesting to see what they say. Maybe you do a two-offer strategy where you lowball them probably around the high 3s, low 4s on SBA, and then maybe offer them 5.7 and above on some mix of down payment from assets, seller note earnout, or something along those lines. Maybe cut the grandsons in for a little piece of it as well. I'm not sure. So lots going on in this deal. Not as simple as the last one, but you can't shy away from the fact that from an income statement perspective, it looks very stable, and it's in a really hot market right now.
I mean, one thing that you'd want to figure out before you went to SBA is to take a look at what the tax returns look like, because SBA obviously are going to ask for that, and maybe that's going to give you a clearer picture than the messy financials that they have. And so if the tax returns check out, maybe it's a potential deal. I'd be asking them how much they're taking out of the business as well, because a lot of times that's what's really driving the valuation from the seller's perspective, is how much they're taking out, not so much what balance sheet or the income statement numbers look like. And so I'd ask that question as well. But I think I would give this one a red light, because those financials just did not give me a good feeling. I spent quite a bit of time trying to sort them out last night. And if it's a small company, that's one thing. But if it's a company doing $9 million in revenue and the financials are that funky, that's a red light for me.
Okay.
Yeah, so people are kind of like a little bit undecided. You got a 0 there, lots of 5s and 10s. People see the potential, but then they see the problems as well. So we're pretty early in the process.
I'm gonna go green light 10, actually. I do think it's worthy. So a green light is you're going to take it further. A red light is you're kicking it to the curb. You're not going to spend any more time on it. And that's a good thing to do on a lot of your deals, because your management of your time, the optimization of your time is really, really important. But I think there's enough in this deal for me to spend a little bit more time with it, especially on the financials. And I'd be interested to see how a two-offer strategy would work with these guys, whether they want more money up front or more money overall. So low green light.
Low green light. Okay.
I'm in the minority though, John. Ollie's using the algorithm. He's a green light 1.63. It's borderline for him.
I thought that was Lewis's act deal, a double decimal point red light or green light.
Sean likes it a bit. Harris does. David, Randy.
Hey, just when I looked at those numbers, I just don't see a happy ending. I've seen these kinds of messy things so many times before, and it'd be nice if there was a way to get to a satisfactory conclusion, but I really don't think there is. There's no way this guy is going to, pay out the coin to get an audit and have to go through 2 years of results and put them into audited financial statements. Yeah. That's the only thing that would make me feel better about this, the financials in this deal. So, to me, I can see what you're saying, Carl. There's a lot of potential there, but I don't ever see getting to the point where I'd feel confident that the SBA would sign off on the financials and all the rest of it. So that's why I'm giving it a red light.
Okay. All right. Cool. So, hey, John, go to Jeremy Bronson on deal 3. Let him kick off with that one.
Yeah. You know what? Let's at least get one person on here. I don't like, even when we're kind of trying to rush through to get here, that we don't at least hear from 1 or 2 people on these deals. So let me call on somebody just to kind of get their take on it.
You call on Brittany Farrell.
I'd love to hear Brittany's take. She had a red light on there. She's a financial professional. Can you give us a little bit of a background on how you arrived at your red light? I think it was 20.
Mine was red light third, but and it was actually a little more strongly than the other one. But again, a lot of pretty much everything that you said, John, and Carl also pointed out too. There's a lot of financial weirdness going on here. Just things don't line up. I don't know. It just doesn't make sense to me. And I feel like you said, the fact that they're not likely to want the audited financials, which is, I agree, pretty much on the way I would move forward with this size of a business and that amount of strangeness in the balance sheet and P&L and all that. So.
Yeah. Okay. Great. That's a good take. Let me conclude with Mr. Sean Bresler. Sean, can you unmute yourself? Give us what your red light, green light was, and a little bit of a justification. Then we'll move on to deal 3.
Yeah, I am a customer of the market. Have a couple of classic cars and performance cars, so I get where this is, and there's a pretty good market, very stable. Usually, it's not price conscious, so there should be some good margin through there. That and if they've got a good name and market, so there's there's a possibility there. I think, but for me, everybody says it's the financials. So I'd give them an offer and, hey, with predicated on, hey, the financials don't make sense. We really need to dig into it, and to your point, they're big enough to have somebody, running the financials in charge of that, office manager or something. So, working with that person, we should be able to really get a good idea of what they're at. So that's where I would go.
Okay. Yeah, that's a great take. I noticed your comment on participating in this market and being a potential customer. So that's why I wanted to get your score. So that's a good take for sure.
So I hope you enjoyed that deal review. Definitely subscribe to this channel. Also hit like and share so that you're getting the very best content from me in real time. Every time I want to announce my deal of the week, I want you to see it so that you can understand it. And what's interesting is the more of these deal reviews that you go through, you'll start to see the patterns. You'll start to see how seller psychology and valuation and deal structure all kind of combine. You'll start to see common patterns when we look at the financial analysis. You'll start to see common patterns in kind of red flags and what the growth and exit opportunities might be if you bought a business like this and you took it forward into the marketplace. So definitely keep watching these, and I will see you soon for the next deal review. Until then, bye for now. Hey guys, I'm Carl Allen. I'm the founder of Dealmaker Wealth Society. I've done tens of billions of dollars of deals over the last 30 plus years. If you're new to my channel, definitely hit like and subscribe so that you can get all of my amazing Dealmaker content in real time. You're not going to miss any of the outstanding information that I'm going to share with you. And if there's a question that you've got, if there's something that you want to know the answer for and you want me to speak to it, definitely hit me up in the comment section and I will record those videos for you and I will get them on this channel as soon as possible. So love having you part of this YouTube community and I can't wait to serve you. Until then, bye-bye for now.